Alright, so right now I'm looking at this 15-minute supply zone. I'm gonna just mark it up. About to get the candle break to the downside. So as I get this candle break, I'm gonna get in for sales. So let's just see what happens with this zone.
Order filled.
Now we got the candle break. Stop loss is gonna go above the red candle and then take profit obviously to a 1-to-1 ratio. Let's just see what this wants to do.
Order filled.
Let's go, bro. Let's take profit hit. We made 1,000 on that trade. Let's just go into why I like the trade. I think it's very simple and textbook. So obviously we're looking at gold. I went to, let me just move this chart over. I went to the 15-minute time frame, and the first thing that I seen was this 15-minute supply zone. Why is it a supply zone? If you know supply and demand basics, it should be pretty straightforward. But for people that don't, there's a gap attached, and then we also have a break of structure to the downside, right? So that's what makes a valid high probability supply. And then another thing that just gave me overall confluence to take this trade, because I know a lot of people may think like, oh, you're in an uptrend, you're bullish, why are you going to take sells to the downside if the trend is overall bullish, which does make sense. But when you're used to the charts, you understand that after a while, the market pushing up and up and up for a pretty long time, there's a pretty good high chance that you're going to get something called a pullback before we continue back up to the upside, right? So I was kind of hoping on that pullback. Obviously, we don't actually understand when that pullback will occur, but something on the higher time frame, on the 4-hour time frame specifically, gave me this confluence that we're going to potentially get a nice pullback with these certain candles that printed. So on the 4-hour chart, we have obviously this major push up, but we also have this wick right here. Let me just mark up this green wick. So the high of that wick, and we'll mark up the low of the wick. What did it do? It came just above this high. So because it came above this major swing high over here to the left side of the market right here, because it came above the major swing high, we call that a liquidity grab. Now this caught my eye because with liquidity grabs, there's a very, very high chance that the market is going to do something called manipulation, take out the sellers in this area, and then go the other way, right? That's a very common thing that the market likes to do. Another thing that caught my eye was this massive bearish candle that engulfed. Let me just remove all these drawings. That engulfed this green candle. So we had this massive red candle right here that went below this green. Why is it not letting me draw? That went below this green candle. Okay, so that gave me a lot of confluence, basically just telling me that there's a pretty good chance we're gonna make some bearish momentum here, probably filling some gaps, and then before we continue back up. So that gave me a lot of I guess that gave me a bias, that gave me a lot of confluence to think that we could have some selling pressure in this area, and that was pretty much it. Very simple, very textbook, not much to it. So yeah, I'm done for the day. It's only 5:21, and yeah, I'll just pull up on Thursday and see what we can do for the rest of the week.